Here's silver continues its march lower, had gold down 25. It's fighting its way back. Dollar weakening a little bit here. I'm going to show you a formation in dollars that says be careful being a little bit too bullish on the dollar here. We're also going to be talking about S&Ps. So we're going to be talking about what happened from last Friday and what are going to be the implications of this recent decline and how we could get on board on this train, because I believe this was just the first part of it that may be completing. You know, we have PCE on Friday. That's going to be the big number of the week. So still waiting for TradeGATEHub to light up here so I could share it. Still don't have it. Still don't have it. Okay, so it shouldn't really take this long for it to light up here. Let me do this. Yep, even so. All right, let's go to the charts. So silver's trying to bounce back here, but you know, I've been talking about that we could see 31.50 and then 30.50, and should we ever break this trend line, then you're talking about lower levels of about 27 and a half. I still don't think that the gold silver ratio has peaked yet. We're getting somewhat of a three drive, but I think there's more left. So I still think silver is going to be leading this decline. You could tell that gold has bounced back pretty good. Are we going to try for another high? I pointed out this 29.20 level, so let's mark it because it really seems to be really supporting this market. I think you could use this black line. I think you could even go with a intraday break of this 29.20 level for a low. But every new high is not confirming. So it's not, I don't believe it's a good time to buy gold. Of course, silver was the better trade, and I still think it's going to head lower based on the gold silver ratio. And the metals are lower. Gold's down 10 with euro up 30. So wanted to go over this in euro. I'm thinking that we could have a three drive here. Okay, see this? And it will have to fail because if we start closing over these levels, say 105 and a half, you can't be long. You can't be short the euro, but I do think that we're going to head up, maybe up there, maybe we just fail from here. But like I said, I just can't get real bearish a dollar after a move from 109.50 to 105. Perhaps we get a probe of one more low at this 105.65. And instead of this being 1, 2, 3, that we have the 1, 2, 3 cluster tighter. Or it could be a right shoulder, right? And we hold, and if we start trading back over yesterday's highs, I have a lot of confluence up here at about 7.5. So I do think that there's a possibility that we go to 7.5, and probably going to trade it with actually the weak sister right now. There's some data due in Aussie, but I think we're going to get our chance to buy it down here at 62 and a half is a range I'll be looking. That's about halfway back. 61 to 64 is 1.5. So in here, 230 or so, maybe later this week. Uh, Also, I talked about the 10-year yield, and it went right to that level that I've been talking about, this 430 level. Even took it out. It's trying to reverse here. And, you know, I would not be buying notes, 10-year notes, because I think that yields are bottoming here in the 10-year and could head up again, that this could just be one ABC. and that we're going to start heading up into the spring. I don't know if it's going to be because of tariffs. I don't know if it's going to be PCE, but when you look at yields on a longer term basis, this level, is why I brought it up, is pretty important. See this black line all the way across here? The next important level is 420, but this may have just been a correction. This is one, two, three, and maybe four, and we get five to actually take out these highs up here and challenge 5%. So be careful with that. Maybe the bonds. I was talking to one of my trading friends, and where we're at in bonds is about 61.8 back. Let me just go to the daily, and I think you could see it better. So we might have some inflection points coming up on the CPI. That's a pretty big rally, right? So I'd be pretty careful up here. This was a great trade. If you bought bonds on this pullback, I want to take your course. Um, so be careful about long bonds. I think a lot of it is, some fear that we're going to have some type of growth scare in April. And I do want to go over what happened in S&Ps and how perhaps we could take advantage of a recovery. So let's go to 4 hour. Okay. So if we completed the first wave down, and if I look at an hourly, you could see we had 1, 2, 3, 4, 5. So we've had a 5-wave decline, which is a reversal signature. So now we should be looking for either 2 or B and look for retracement levels to sell into. My preferred ones are ideally 60.80 because that'll be very close to the pivot of 60.90 on this line that we finally took out on Friday and took it out with reckless abandon. So I'm going to be selling rips up here. One of the most important things that could happen today in stocks is watching what Nvidia does, because we're right back to where it should start digging in its heels. This 27 level, 26, we have earnings. So it's very possible if we have good earnings that we're going to blow and get one more high in Nvidia. So that could happen while the S&Ps are retracing. I mean, I had this discussion. Couldn't the semiconductors, which have been lagging the way forever, have not made new highs in well over a year, maybe working on two, right? Here's the last new high, July 24. So almost for a year with the market making new high after new high after new high. Maybe the semis could recover and make new highs finally, while the Mag 7 continue to suffer. And, I think that there weren't many people in agreement with me being focused on the Mag 7 for failures. And, most people were enthralled with what Meta was doing. But here we are, we're back to the throwover, and I think we're back underneath it. Doesn't look as good. A lot of people were impressed with Amazon. A lot of people were impressed with Google's new chip for quantum computing. A lot of people are staying home watching Netflix because their cards are maxed out. Microsoft has been under pressure forever. This is a big area. So this too would be a shorting candidate, because if we take out this 400 level, we could trade 340. So I'm looking for, if this count is right on the S&Ps, I'm looking for anything from a 10% correction to what no one's talking about is the possibility of a 20% correction. And how I come up with that is because of this line that, the broadening top formation, and the bottom line for the broadening top is going to come in right around 5,4,900. Let's look at the weekly. So here it is. So it's a little lower than that, about 4,800, which, would you say 4,800 is an important number? Look left. Look at this. This high held for, that bear market year that we had in 22. And then once we took out 4,800, we never looked back. So this would be close to a 20% pullback. I know most people aren't looking for that, but that's usually when it happens. And NASDAQ could even be worse. Okay. NASDAQ could be, down towards its 200 week at 16,000. So the point is, if we're in this correction period, you're not late. And so you miss the first wave, but now you have a chance to sell a fib retracement because this wave should be 1.618 of the last wave, which was about almost, 190, 180 handles in S&P, not 190 because the high was 6150. So the next one could be 320. If we top at 6080, that's going to give you 5,700, which is close to 10%. So something to keep in mind on that. And I think that's about it. I still think WTI is good to break down under 70. So I'm being patient with that. And the S&Ps, I just want to say one other thing about the S&Ps. And the month of March, in fact. We're entering a month that is eclipse season. So I think there's going to be a lot of turning points. I don't know where, but we'll know by what direction the markets are going heading into them. Don't hold me to the dates, but I believe we have a total lunar eclipse mid-March, March 14th. Then we have the seasonal change, which at times can shift trends, something W.D. Gannon believed in, as we have the equinox, the vernal equinox, so spring. And then that's followed up by a solar eclipse, I believe, on the 29th. So it's eclipse season. I think March is going to be really wild. So strap on your seatbelts. I think there's some good trades ahead. Uh, Even though gold is fighting its way back, I think it was a great idea that I had you guys come out of miners. There was Newmont's week last week, following through this week. There's GDX starting to give up the ghost as well. I said at least we'd see 38, 37. Some of the silver stocks uh, also look heavy. Some people might call this a head and shoulders top. See, AG, still think we could shoot towards new lows. So the key being, keep an eye on the dollar. I wouldn't be pressing the short side of the dollar, even though it's up here. The euro's up. I still think that we could be putting in some type of bottoming formation. If I want to be short, I think I'm going to have better levels to give that a shot at. And I still remain negative gold, even though it's trying to fight its way back. It will cave one day. And negative silver. So for the most part, a lot of calls have been dead on. If you check my Twitter feed yesterday, someone was asking me about Bitcoin and was trying to show me some type of divergence. And I said, I'm going to go with what is the most important thing that I see on the Bitcoin chart. And that was a descending triangle. And I said, we've attacked support zones. Look how many times. And the more you attack a zone, the weaker it becomes. It's like trying to knock a door down. You may not do it on your first attempt, but maybe by your third, because it's weakened from already being tested and pounded, that eventually it caves. And that's what happened yesterday on the close with follow through today. So Bitcoin as well is not a great sign that there's a lot of liquidity out there just trying to find a home because there's selling going on. So that's my wrap for today. Tomorrow I have Danny with us. Danny and Diane, let me just see if we have that up here. It's going to be a great interview. As he's an ex hedge fund manager. Okay, so I don't see him up today, but you'll see it on X, and that's a wrap for me. I think there's going to be great buys in the miners, but not yet, not for a while. So I'd avoid them. And for the most part, there aren't many things that I want to be long right now. Normally, when you enter a risk-off period, that's when you don't want to be long much. But anyway, the dollar is weakening and the gold is weakening. Haven't seen that for a while. But I'm not going to short the dollar at 106. So we'll see what happens here in the next day. Maybe I'm all wet and we're just going to flush to 104.50. That was a possibility. But I think I'll go with this formation on the Dixie that we're setting up with divergence, some type of short-term bottom, whether it's in or there's one more low. So those are my calls. I invite you to join us in the room. If you're a stock trader, you got to know what Mike is thinking with option tells, with sweeps, with what the wise guys are doing. Shows a lot of great content in there every day. I'll be posting some of these ideas when I see they're ready to execute, so you could check the site. And if you want to become active, feel free to share your work as well. And remember, most of all, don't just count your pips, count your blessings. Good hunting, everyone. I'll see you tomorrow for the interview.